Hey everybody, I'm Noah with the Valor team. I am doing this video for my car. I am trying to shoot it between showings because I wanted to get this video out to you guys as soon as possible and talk about the real estate market and where we're at. I don't do a lot of market update videos. One of the things, guys, is if you have a realtor that says that they know where the market's going or they can predict the market, you probably need a new realtor. The truth is, nobody knows. Nobody knows. I don't know. And realistically, a lot of agents, they just try to pump it up, right? They try to create FOMO, fear of missing out. And hey, boom, 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 market's going up, sell, 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 or buy, 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 quick before rates go even higher. And I'm not really about that life. I don't like putting pressure on everybody. But what I did want to do in this video, and I apologize, it's going to be a little long. I did want to go over some metrics and some charts and some numbers so you guys get a good idea of where the market is at and where, how I interpret it. I'm not a financial advisor, I'm none of that stuff, and I'm not an economist, but a lot of realtors claim or act like they are. And I think it's really important that you guys be able to differentiate yourself or differentiate from people that claim that they know where the market's going, and people like myself that just say, hey, this is how I interpret it, and this is my thoughts on it. So that's really important. There's a couple of things to think about, guys. So the Fed just raised rates again in one of the biggest rate hikes that they've seen since the 90s. Now, a Fed rate hike does not mean that they're hiking mortgage rates, but guess what's happening? It's creating a ripple effect, which is actually causing mortgage rates to rise. One thing I want you guys to pay attention to is that mortgage rates now are actually almost or around double what they were before COVID, okay? That's one thing to pay attention to. The second thing is that the average household income for America, and there's different metrics, there's different graphs, right? Some say it's actually gone down, some say it's gone up a little bit, I think a couple $1,000s a year. But overall, the average household income, the numbers we have currently for like 2021, 2020, has barely gone up. So think about that for a second. If you were a buyer before COVID and rates were 3s and 4s, okay? And you were making, say, an average of $68,000 a year, you could afford XYZ. Now, rates are almost double, or they are double what they were pre-COVID, and really our buying power, our average household income has barely gone up to even match inflation. Inflation is outpacing wages. Generally speaking, interest rates and home values are correlated together. The old adage is the higher the interest rates, the lower the home values. The lower the interest rates, the higher the home values, right? So we've seen that in the sense of we've had really low interest rates the last 2 years and home values have skyrocketed. Now we're starting to have higher interest rates, and the consensus is that home values are going to correct. Are they going to crash? I personally don't think they're going to crash. And it also depends on your definition of a crash, right? I think there's going to be a good correction. What's a correction? If you guys do any investing, stock investing, or you learn, a little bit about that, a correction is basically, in layman's terms, the beginning of a formation of a bubble, but the market corrects so it doesn't burst, okay? That's the best way I can explain it. So, if you think about home values pre-COVID, right? If the average buyer really hasn't gained any more buying power in the form of their income, and it's now even more expensive via interest rates now to buy than what it was pre-COVID. Something to think about is that if you think about the market before COVID, which it was a seller's market, and you just compare it to now versus then, the potential to have a lot less buyers for a specific listing is there, right? People just can't afford it. So that is one thing that I think that we really need to pay attention to. The next thing, guys, is buyer sentiment, right? So how are buyers reacting to this market? I've got a couple listings going on right now, and I'm also paying attention to what's in MLS. We're starting to see a lot of price changes. We're starting to see a lot of buyers put deadlines on their offers because they have more inventory to choose from. Gone are the days of buying, depending on the price range and location, that's a caveat, but the days of a buyer really only having one or two properties to choose from and trying to outbid everybody else, those are shrinking. I've had buyers go, you know what, there's 3 or 4 other houses on the market that I can choose from. I need to know by midnight tonight or I'm going to pull my offer and go somewhere else. I'm having buyers ask for closing costs to be covered. Also with builders, we're seeing a lot more builders have inventory on the market, and builders are flooding my email. They're calling me. I mean, I could barely get a builder to return my call the last 2 years. Now they're trying to offer us as agents more incentives. They're trying to offer buyers more incentives. They're calling me, leaving messages, texting me, sending me flyers, emails. That's because they have inventory they need to get sold. So with that being said, guys, if you can afford rates now, I think mortgage rates are going to continue to go higher than what they are. If you need a house, if you want a house, reach out to me. I'll get you set up with my lender, and we can see if it's the right time for you guys to buy. So that's just something to keep in mind. I believe we're entering correction territory here. So if you've been waiting to sell your house and cash out at that equity, let me know and we can run some numbers to see what we can list your house at. Because where your house is valued at now, it's going to start shrinking, I believe. We're going to see that correction, and what I'm thinking is that it's going to correct, and then we're going to balance out to a better level of appreciation, right? Historically 3% or so a year versus the 20, 25, 30, 40% we've seen over the last 2 years. I know this was long, guys, and I'll try to put up as much graphics and numbers and stuff as I can on this video. But if you have any questions at all, please reach out, let me know. Please do me a favor, like and share this video, guys. It really helps me out with my marketing, and it helps me beat the algorithm. Thank you for sticking with me to the end of this video. I appreciate it, and I hope you guys have a happy weekend. Thanks.